Excellent. Yep, you are. Okay, so welcome everyone. My name is Steve Hadcock. I'm with Cornell Cooperative Extension's Capital Area Agriculture and Horticulture Program. Joining, uh, Want to first introduce Liz Higgins, Elizabeth Higgins. Liz is kind of the our champion and for this. And kind of brought a group of us together to do this. Joining us, and also on the planning committee and joining us today is Desiree Keever from Cornell Cooperative Extension of Delaware County, and Greg Muck, who is with Cornell Farm Net. So, and we do. There are some others that are part of the planning committee. Colin Hostetter, for one. Um, and they may pop in here. Oh, there's Colin right now. So welcome, Colin.
Hi,
To
sorry.
No worries, no worries. So we want to get started. This is a multi-session webinar series that you're all aware of, and we wanted to kick it off today to talk a little bit about maybe some of the basics, but also hopefully to remind you of some things that is necessary as a farm owner. That you really need to be thinking about, and appreciate that as farmers and running businesses, you have so much on your plate and things to have to think about. And insurance because you may feel you have the security of insurance, to help protect you, which is great. But there are certain things that you need to keep brushed up on and aware of in the insurance policies and insurance in general. And we're very fortunate today to have Jennifer Messing with American National uh, to go to give us a presentation on insurance. Jennifer, as I have worked with several times, she does something similar for another course or a course I teach, and it's very informative and engaging. And I think you'll find her presentation and being here well worth it. Also, there will be a survey at the end. It will also be mailed out to you as well, or emailed to you as well. So look for that. We really appreciate if you would fill it out because it will help guide us possibly for the rest of these sessions, but certainly for any future sessions that we might have on insurance or other farm management topics. So with that, Jennifer, I turn it over to you.
Okay, thank you, Steve. Hi, everybody. Jennifer Messing, here to talk about insurance, everybody's favorite topic. So apologies, I do not have a camera. I'm actually in Savannah, on a other conference, but so the hotel Wi-Fi isn't exactly the best for cameras. But anyway, but you don't need to see my face. You can see the little photo of me, but you can look at all my slides. So hopefully you guys enjoy this. Just a little bit about me. Steve said I represent American National, also known as Farm Family Insurance. We are one of the larger farm insurers in the country. In addition to that, I've been doing this, over 15 years. I love doing these presentations. I think insurance is fun to talk about. And I have been on the other side of these webinars enough to know what can make a fun class and can what make a really boring one. So hopefully this one's fun. I do like to do more interactive. I see the chat box has already been kind of blowing up with a bunch of different things, which is great. But if you have questions while I'm presenting or talking about something, just put the question in and maybe Steve or Liz can kind of just give me a heads up if I start going off on a tangent and I don't see the questions. But I think questions while we're on a certain topic is way better than wait till the end and then who can remember what your question was or who can remember what we were even talking about. So anyway, so if you have questions while we go through, like I said, just pop them in the question box. So today we're doing really, overview kind of discussion on not only insurance, but, specific farm insurance. So we'll dive right in with a good, well, there we go. A good definition slide. Always a good start. So, what is insurance, right? Defined as, you can see there, a contract by which an insurance company or government agency provides a guarantee of compensation for specified losses, damage, illness, or death in return for payment of a premium. What a fun way to start this presentation. But yeah, but basically it's the idea of a financial safety net. You pay a regular set premium every year, and that regular set premium is generally going to be lower than what a claim payout could be. So the idea is that it's this relationship that you pay the insurance company a premium, and the insurance company promises to provide a payout for any type of covered claim, based on what loss or damage, occurred. So, like I said today, what's farm insurance? So, farm insurance is a specific type of insurance. As you could see on the last slide, it had a bunch of different insurance types of words and policy types. But today we're really focused on farm insurance, which is what the specific types of insurance for your risks and exposures that you face on a daily basis having a farm. Um, and there's a lot of insurance companies that provide farm insurance. Everybody's a little different. There are some carriers that really, if you have like an equine operation, you should be insured with, or maybe you have a dairy operation, different type of, insurance needs. And there's different carriers that can meet maybe all those types of needs or very specific niche market needs. So it's important to, do some research, talk to agents, get information, because not every insurance company fits every type of farm. Um, so before we get into the fun stuff, we're going to go over a little terminology here. I see things. Guarantee. That's funny. Typically the residents and the farm are on the same property. Is it best to bundle residential on and a farm policy together? Is the claim clear in this case? So, great question, Jared. It's going to come up in like 2 slides from now. I'm going to start talking about that. But bundling, yes, is basically how the farm policy really operates. It combines, your house, your buildings, your equipment, your liability all together on one. So we'll dive into that more. But great question. Um, so anyway, so insurance terms. Us insurance agents have a great tendency to basically talk about words and things without realizing that normal people who aren't in the industry and deal with this day in and day out have no idea what they mean. And we sometimes forget to explain. So just a quick little rundown of some of the terms I'm going to be using throughout this presentation. So an insurance policy. That's basically the giant 100-page document that comes in the mail or via email, which has, what's being covered, all the endorsements, the exclusions, basically the whole big policy. But within that big policy are called declarations pages. So these are really normally the first like 4 to 10 pages of that big policy. And they provide things like, who are we insuring? What's the named insured? Is it the LLC? Is it the corp? Is it you personally? Who's being insured? And then it provides things like the effective date. When's the policy start? When's it end? What are we covering? Where's the location being insured? Are you insuring a house? All those types of important information to know what's actually being insured with this policy. So those are kind of the quote important pages, as you can say. The whole policy is important, but those are really the ones that when you're looking to say, hey, what am I insuring? Those are where you look. And then you have coverage limit. So a coverage limit generally applies to any type of building or equipment or property. It's what you are insuring that building or item for, the dollar amount associated. Whereas a liability limit is what your policy will provide you in terms of coverage if a lawsuit was to ever occur. Generally, liability limits are higher, depending on the size and scope of your operation, but standard practice right now is about 1 million per occurrence, 2 million aggregate, which we'll get into at a later slide. And then you have deductible. Everybody knows the deductible. Normally, everybody knows deductibles from their auto insurance because everybody says, oh, what's my comp and collision deductible? And a deductible is basically what you have decided you are willing to pay out in the event of a claim. So your deductible could be as low as, $250, and it could go as high as $5,000 or $10,000. It's basically you're taking on some of the risk. So the higher your deductible, the lower your premium. So that's something, to really go over with your agent about maybe there's some wiggle room here, as a way to save money, but also not have to, incur the cost knowing, if a claim happened to my house, I'm handy. I can fix my window. I'm not going to put in a claim for that kind of thing. So we can go into that a little bit more, but deductibles are a really fun way to kind of play with the premiums and kind of see, what's the deductible that fits your needs, your operation. Then you have replacement cost and actual cash value. As you'll see there, it says RC and ACV. So replacement cost is the full value to replace, in this case, we'll talk about buildings, a building, what it would cost to rebuild. That's the replacement cost. Now, in today's market, with the cost of materials and the cost of labor and so many changes, the replacement cost values of homes and outbuildings are a lot more than the majority of market value. Because we aren't taking, from an insurance perspective, we don't take into account how much my land is worth, or this is a great school district, or this is a really bad school district. We purely look at what's the cost to rebuild that structure based on labor, materials, and also the area you live in. To replace buildings, where I'm primarily based in New York is costing a lot more than, buildings that I insure in Vermont and even up into like Maine and New Hampshire. So the location does really affect that full replacement cost value. But if you don't want to insure your home or your building to the full replacement cost, maybe it's a little older, maybe it's a little run down, or there's an outbuilding in the back field that's a little run down, you can work with your agent to talk about actual cash value, which would be taking depreciation into account. So you wouldn't be insuring that building to its full replacement cost value, you depreciate it. So say you had a barn in the backyard or back field and it was, the full replacement cost was 50,000. And you said, you know what? With depreciation, it's a little run down, it's older, hasn't had a new roof in 10 years. Maybe we depreciate it by 20%. Let's only insure it for 40,000. So that's a way to really ensure that you're insuring the structures like you want them to be insured, that best fits your needs, instead of potentially overpaying for just replacement cost on everything. So again, just something to kind of think about. Perils, these are what we insure against. So these are what we're providing insurance for. So the peril example would be fire, lightning, wind, hail, weight of ice and snow on a roof, collapsing of a roof, falling objects, that beautiful tree in your backyard that is what we like to call, a house killer, falls on a house. House is going to have a big hole in it. Falling objects would be covered. Freezing of pipes, that's a big thing here in the Northeast. So those are the types of covered claims or perils that the insurance policy would provide coverage for. Just some examples, there's a ton. And then scheduled versus blanket coverage. So these two really come into play with equipment or livestock, things where either you want to specifically insure that one item or that specific thing, or you want to just blanket cover. So say all of this is covered under this limit. So there's different ways around that. And then depending on the type of, farming operation you have, there's coverage for the types of animals on your property. It extends to your farm liability, and it would be based on do you have large animals or do you have small animals? So large animal, be like a cow. Small animal, be like a goat. So just some kind of terms to keep in mind. Lots of chats blowing up.
So, Jennifer, we do have some
Yep,
questions.
I see them.
Okay.
Okay, thank you. I just saw like all these little do do do. On that thought process, if you lost that structure, wouldn't the replacement cost be more than the structure if it was depreciated? So the way that if you insure something at actual cash value, it would end up that actual cash value amount is the highest you would end up getting. It's the most you could get. Whereas replacement cost would be the full value. So I hope that answers the question. The replacement cost would always be more than the actual cash value, but if you insure something at replacement cost, that means you're insuring it at its full replacement cost value, and that's how the claim would be paid out, whereas actual cash value would be a lower max payout. I hope that helps.
And
Um,
there is another question just above that is that typically the residence and the farm are on the same property. Is it a best practice to bundle residential
yep.
and a farm policy together?
Yep.
Is the claim clear in this case?
Yeah, so when it comes to farm policies in general, it is a combination of your main residence, your farm buildings, your farm liability, your operations, all of that would be on one policy. So then it wouldn't be, oh, I have to go to this policy, I have to go to that policy. It's all combined on one. There are some differences when you have, depending on how properties are deeded or the operations and who owns what. But there are ways to combine multiple named insureds onto one policy in addition to, putting everything on the same property. And again, that I'll expand on more of that, but yes.
Okay.
Okay, Liz had a question. Would you be considering of how likely you are to want to rebuild what you had if it was destroyed? Yes. So a lot of the time you could say exactly that. The old barn, you're not going to rebuild exactly what was there. So you want to start taking into account, with older barns, the beautiful wood and all of this fancy old real good quality ways of building things, you're not really going to find anymore. So there are ways when you do the replacement cost or the actual cash value of factoring in, you're going to be using today's materials, not materials from 100 years ago. So there are ways of making sure that you're ensuring to not only make yourself whole, but can affect how you're building things today. And that's, again, something to really go over with your agent and talk about specifically, what applies to you. And I think that's the great thing with farm insurance in general is that it's so client specific. It's not a broad brush policy where it's, this applies to everybody. You can really dig into it and make it specific for you and how you want to insure your operation, which I think is pretty cool. Isn't it more beneficial to insure for replacement cost and actual cash value, especially if it's a building you need and use with the rising cost to build? Yes. I think that replacement cost is always the better way to go. But I do also know that there are some clients I have that prefer the actual cash value. And that's a personal preference. And it is up to the insured at the end of the day. I'm not going to force anybody to say you have to go replacement cost, but I do see, the reasons why, some people just say, no, I want actual cash value, keep insurance costs low, and it'll make them whole to a point if a claim was to happen. Um, to Elizabeth's point, if you had some capital saved for a replacement structure, that would make sense to pay less on the insurance coverage. Yes. Um, if the public is coming on the site for classes, is it safe to have your home included on the same insurance policy? I guess I'm asking how to protect your home should there be something crazy. We're going to get into that more in a little bit, but generally when you have the one policy, you'd have the liability limits that would extend to people coming to your property, say for farm classes or workshops or just to purchase, at the farm stand. So yes, it would be on the same policy. That's where the ownership aspect gets in there. Who owns it, who's the property deeded to, and making sure that you're properly listing all the names on the policy. And that's also where another type of insurance, umbrellas, will come into play to provide that extra coverage, all of which we're going to get into. So now we're going to go into some fun looking slides where we have photos. So this is a common one I get a lot of the time with smaller or newer farms, which is, I have a homeowner's policy. I don't need farm insurance. Well, no, you do. Homeowners policies are really for a home, not for a farm, not for a business. And a lot of homeowners policies also have exclusions. So, for instance, depending on the homeowner's policy and the carrier, it's all, up for who you're dealing with, but they're pretty standard to have ineligibility if you have any livestock on your property or you end up with two or more horses. So, a lot of the time people might buy a piece of property, they might have a couple acres associated with it. At the time, they just get homeowners because they don't plan on farming. And then, as we all know, I don't plan on farming, but now I start farming. They don't talk to their homeowner's agent, and then one of two things tends to happen. Either their homeowner's company is doing, a normal 2 to 5 year review. They start looking at screenshots, satellite images, and all of a sudden they start seeing little things that look like cows, and then they're gonna call or send a letter and say, "Hey, we're gonna non-renew you. You're now a farm." Or the more horrible way that homeowners policies and insureds find out they don't have coverage is when something happens. So somebody trespasses on your property, you have three horses, one of the horses kicks them, they sue you, you put in a claim with your homeowner's policy, and your homeowner's company will come back and say, oh, not only did we not know you had horses, we didn't know you had three horses. Ineligible, not going to provide coverage. So that's something, to be aware of. And then also on homeowners policies, there's called other structures coverage. And this is 10% of the home value. So the other structures coverage is really to provide things like that detached garage or the small shed that you keep your lawnmower in. It's not really meant to insure, five outbuildings that are used in a farming operation for two reasons. One, once those outbuildings are used for a farming or business purpose, they could be considered ineligible for coverage. And two, that 10% of your home value, I mean, depending on the value of your home, is that really going to provide for those five outbuildings? Probably not. If you have a $400,000 home, you have 40,000 of coverage for outbuildings. So if you have five larger outbuildings, I don't know if that's going to provide enough coverage. So that's something to keep in mind too. And then lastly, homeowners policies in general have an exclusion for business operations. There are ways to add endorsements back to try to extend some coverage, but if you have a business, you really need to have business insurance. Or in this case, if you have a farm, you need farm insurance. Um, so moving on, this is where we get back to Jared, I believe, who asked the question of, you know, the farm, the house, it's all on the same property 9 out of 10 times. So how do we insure it? So on our policy with American National, we have divisions. So I didn't put in the divisions here, but it's division 1 through 5, and it's basically a separation of the personal stuff, the farm buildings, the equipment, the scheduled personal property, and the liability. And it's all on one policy. So that way it keeps it pretty cut and dry that everything being on that location is insured on this one policy. So, looking to insure your farm residence. So, these would be dwellings that are lived in. So, you're talking your main residence, you're talking mobile homes, or maybe a tenant occupied residence. Maybe you have your main home, but you also have your primary farmhand who lives on the property in a separate tenant occupied residence. All of those types of homes would be insured in the farm residence part of the farm policy. And then you'd look to insure, your contents. So contents is you take the house, cut off the roof, flip it over, shake it out. Everything that falls out would be considered contents. Now, there are some limitations on not only farm policies, but with regard to items. So, I put three big ones there that I've seen with my clients where, jewelry has a max of 1,500, guns have a max of 2,000, and, silverware has a max of 2,500. So that's just saying if you don't specifically insure these items or these types of items, that's the max payout you'd get. But in a little bit, you'll see how we can make sure that you're getting the full insurance value for those types of specific items. Um, any questions on insuring the house right now? No? Okay, moving forward. Uh, hopefully. There we go. So then we're looking at buildings and building contents. So this is when we look at, oh, I do have a question. Nope. Okay, great. Um, so building and building content. So these are the outbuildings, right? These are the barns, the dairy barn, the horse barn, the pole barn, all the types of barns. Silos on the property, maybe it's just a small storage shed or a private garage. You would look to insure it under this part of the policy. Greenhouses, depending with greenhouses, if it's plastic covered. The plastic is really the more expensive part of insuring those types of greenhouses. And as long as the plastic is, for us, it's under 5 years old, we can actually insure the plastic. So that's kind of a fun thing that not a lot of people are really focused on because they're like, oh, I don't need to insure my greenhouse because of the cost of the actual structure generally being low in the ones I'm talking about. But then once I say, well, how new is the plastic? And they say, oh, we just did it last year. Then that's the conversation we want to start looking at because that is, valuable, especially where I'm primarily based in the Northeast. Um, and then we get to contents of the building. So again, similar to your farm residence, you're saying, okay, if I take the roof off and I shake it out, what's going to fall out? In this case, looking at just the items that are in that building 99.9% of the time, not the tractors, not the cars, not the farm tools and equipment that kind of could be in this barn one day and then this other barn the next and maybe left out in the field. It's if it migrates from building to building, you're not going to want to insure it as contents. You're going to want to insure it in our next section. But in this case, we're talking about, maybe you do meat processing. You have a chicken operation and you have a ton of freezers with all your refrigerated and frozen products you're going to sell. So those freezers, we'd want to insure refrigerators, we'd want to insure as contents because they're going to be in that barn 100% of the time. And in by doing that, you also can extend coverage to get loss of refrigerated products. So there's a coverage called equipment breakdown that can extend to your outbuildings. So say you have a power surge or you lose power, um, something happens to your, refrigeration system. If you lose all of that refrigerated products, there's ways to get insurance coverage on that, and you'd actually get reimbursed for a loss of refrigerated products. So I think that's a pretty cool coverage, something definitely to talk about with your insurance agent. It doesn't normally get just magically added on. Um, so something to definitely keep in mind. Um,
Jennifer, we do have another
so then,
question.
oh,
What if, so we've been talking about ownership, where own the land, the buildings, and so on. What about leasing, or will you cover that later?
yeah, so that'll come up with leasing out land, buildings, and or tenant occupied houses. That would fall under the liability section of the policy. You'd still look to insure the building that you own as an insured, residence if it's a house that's rented out. Um, you'd insure it. However, then you would also add on liability coverage for the fact that you don't personally live in it. It's tenant occupied or you're leasing out, 100 acres of land to somebody else to farm or hay, you'd insure that on the liability side. So there are ways to
Okay.
add that on that I'll kind of touch
But
on.
what
But
about the
yeah. Um,
lessee?
so in terms of their needing
Well,
of their own insurance,
yes.
yes. So anybody that you're leasing any land, buildings, anything to should always have their own insurance. Um, Similarly, they should have farm insurance or they should have renter's insurance. If they're, renting out a house from you, they should have renters. And then they should always list you on their insurance policy as what would be called additional insured. So by them listing you on their policy as additional insured, if a claim was to happen, and it was their claim, say for instance, somebody came to, even though it's your property, they came on to your property to visit them to maybe buy product at the farm stand. You would end up, if there was a claim because they got hurt, you would all be looped in to the claim as you, the property owner, but also them as the farmer operating on the property. But because the injured party was visiting that farmer, you would end up being covered under their insurance policy as long as you're listed as additional insured. And that's something to make sure that your agent can always help with, you know, if you have a new farmer, they don't have insurance and, they're going to lease property from your client and they don't know what they're doing, you can always help and say, "Hey, let me talk to the person you're looking to, rent out your farm to or whatever the case may be. Maybe there's a way to kind of help provide that insurance." And also making sure that from a legal perspective and like lawyer side of things, that contracts are always in place. Contracts are super important and really big if a large claim was to happen because it really sets the tone for, okay, who's responsible for this and who's responsible for that. So contracts are always important, and that within that contract, it'll also lay out the type of information like what type of insurance is being provided or required, who's going to insure the building, who's insuring the equipment. There's a lot of things that the contract will really lay out, so that's important. Does that
Okay.
answer the question you had, Steve?
I believe,
Okay.
okay, so Lauren asked again, I lease it about She's here to learn about farmers leasing land and need the in form of insurance coverage for land and for those infrastructure equipment that is owned by the landowner. Not from, well, I think you did answer it, is that you did answer it from the lessee's perspective.
Yeah,
Um,
so yeah. And then for the revenue or at cost, it depends on how your insurance carrier justifies that equipment breakdown. We would do it at the cost, not actual revenue for that type of coverage. However, there is another type of coverage, loss of business income, and that would factor into the revenue side of things. So it's kind of two different coverages to get, depending on how you actually insure it. If you're just looking for blanket or the equipment breakdown coverage, it would be at the cost of the product you lost, not the potential revenue. Client based. It's an honor system. They would ask you to fill out like an inventory. It is client based from what I've seen. No problem. Okay, so farm personal property. So this is where you're looking to insure either your livestock, your farm machinery, your farm products, supplies, and tools, or even your hay, feed, or grain. So if you have, heavy farm machinery, maybe it's new, a lot of the time, if it's financed, you're going to end up needing to insure it as a scheduled piece of equipment. That would mean that it's specifically insured at its own dollar value, and then whoever, the financing company is added as a loss payee, so if any claim happened to that equipment, they would be notified and paid appropriately. Um, but all of these coverages are really specific and to your operation. So, if you have no livestock, guess what? You don't need to insure any livestock. If you only have one piece of farm machinery and it's from 1950, I don't know. Do you want to insure it? Maybe, maybe not, but it's your choice. Farm products, supplies, and tools. I think this is a really great coverage because it provides overarching coverage for various items that move, like I had said, not contents of a building, but the stuff that moves from building to building to building to building. Um, but if all of that stuff happened to be in a building that burnt down, that's when you would want to make sure that you did have some coverage there. And then the property average coverage, this applies, if you have cows or a lot of hay on hand or feed or grain, and it's kept in a barn or it's kept outside. If you have a lot, then this is when you want to start looking at maybe insuring it. It would be on a rolling average, so we'd have to do an inventory of months you have more than the other. Maybe you have more in the spring, less in the fall, vice versa, whatever the case may be. We basically create an average, and then it would be an average dollar amount of hay on hand or feeder grain per month, and then we could insure it that way. A lot of the time, it's larger operations that tend to go for this coverage. But again, like I've said the whole time, personal preference. If it's something that's important to you and would have a huge negative impact on your operation, if something was to happen, that's something we can look to insure. Um, by the same people. Okay. If two entities operate on the same property owned by the same people, could one policy be used to cover both? Correct. It would be one policy you could do to cover both. Um, the example would be a good truck versus the property. Okay. Food truck versus the property. I don't exactly understand the question. Sorry. We'll come back to that. Maybe it'll take me a little bit, but um, okay, and then scheduled personal property. So this goes back to the farm residence and the contents aspect of certain items not being insured or allowed to be insured for more than a certain stated amount. So these are really high value items you have. So the number one thing that people tend to specifically insure under this type of coverage would be wedding rings. But you can see there's other things: silverware, furs, guns, stamp collections, coin collections, fine arts. Really, if it can be appraised and you have an appraisal, we can specifically insure it. And at the time of a claim, that would end up being used and paid out. I'm going to go back to the chat real quick. Oh, so if you had food trucks come to your farm. Okay, so the food truck would be a separate entity and they come to the farm. So you'd want to make sure that the food truck had their own insurance. Um, and depending on your contract with the food truck, are they supposed to list you as additional insured? Again, really, anytime, another rule of thumb, anytime that another entity is coming onto your property, to do any type of maybe class or a food truck, or maybe they're a vendor, you always want to get what's called a certificate of insurance. And you always want to make sure that they can list you as additional insured on their insurance policy. That again would just make sure that their policy would cover you if anything, was to happen in a claim. Um, so I hope for schedule. Oh, okay. For scheduled personal property, is the receipt for what you paid good enough for the appraisal? Do you need an independent evaluation? Depending on the time of when you purchased it. So, for instance, I've seen with wedding rings, people call and they say, "Hey, I bought this a month ago. Here's the full receipt." That normally, as long as it's from a reputable jeweler or a company like that, um, that would be enough. But if it's something that's maybe 5 to 10 years older, you would need an updated appraisal. So it would have to be more, you know, updated in terms of a date on the actual receipt or appraisal. So I hope that helps. Uh, Okay, so here's the one, the part of the farm policy that everybody seems to really want to talk about, and I love to talk about it because it's fun. So limits of liability. So this is the, hey, somebody's going to sue you. How's your insurance going to protect you part of this whole thing? So standard limits in today's market are 1 million per occurrence, 2 million aggregate. So what the per occurrence and aggregate means is that 1 million per occurrence, so per claim. 2 million aggregate is the policy period. So technically you could have two $1 million claims in any policy period if those are your limits. There are other limit options. You could go lower, you could go 500,000, 1 million. You could also go higher. You could go 2 million, 4 million. So there is some wiggle room, but in the industry today, in terms of going back to, people requesting certificates of insurance, which is basically just showing proof you have insurance, or listing other entities as additional insured. Everybody really requires 1 million, 2 million. Having more is great. Having less, not really that great. Everybody's sue happy in today's day and age. So the more liability you have, the better, honestly. But as part of the liability coverage on the farm policy, there's 3 sections. So this goes back to that combination of my personal life and my personal house and my personal liability is on the same property as my farm and my business. This is where it all mixes together. So your farm liability coverage would cover bodily injury or property damage, so injury to people or damage to other person's property caused by your animals or machinery. So say, this happened to one of my clients many years ago now. He had a buffalo farm. The buffalo got loose. Buffalo ran all over onto highways. Buffalo hit a lot of cars, and there was a lot of insurance being paid for the damage that his animals that got loose caused. So that would be an example of something that would be covered under farm liability. Your personal liability covers bodily injury or property damage caused by you on or off your premises. So this is where the personal liability is the type of liability that's only provided on a homeowner's policy. So this is that type of liability on your farm policy. It's just a line item coverage. It would list you and your spouse, or if you own the property with multiple people and you all live in different homes, you don't have to be married, but you can put personal liability for each named insured. And again, that's something to kind of go over with your agent and say, here's the situation, here's who lives where, how can we look to, make sure that all parties involved have the correct personal liability. And then your business liability. This covers any liability from your business operations. So your general farm sales, and also specific types of business operations, which we'll get into, which would be just standard business, equine, and agritainment. So I don't see any questions, so I'm going to keep going. So, business liability. So, when it comes to farm policies, these are the types of coverages, and there are many more. This is just kind of the primary ones I've been seeing in the last few years that would be covered. So, say you have a bed and breakfast on your farm. Maybe you run some day camps for kids, some farm camps. You sell dairy products. Raw milk is still very big. All states have different requirements. So, that's something specific to, knowing your state regulations and laws and insurance requirements. Feed, hay, or grain distributing. Maybe you sell food products. You go to the farmer's market. Tons of farmers are not only selling, fruits and vegetables, but also breads and, jams and jellies, maple syrup. Harvest your own. So maybe you haven't, like you can see there, an apple farm, an orchard, or a Christmas tree farm. People come on your property and they're going to pick their own apples and they're going to cut their own trees. And we all know what happens when people bring saws onto your property and then they start cutting Christmas trees. Something bad could happen. So by documenting on your policy, hey, I allow the public to come on my property and I allow them to pick their own fruits, veggies, or Christmas trees, by having that on your policy, then your liability coverage would extend to provide coverage if a claim from that exposure occurred. Sale of meat products, anything people are consuming, there's always that potential of something happening or going wrong. Um, Lesser's risk. So this is when we go back to leasing land or buildings or property, in general to somebody else. You would add this coverage onto your business liability. So that basically says, hey, the insurance company's aware and you're going to pay a premium for the fact that you let other people on your property to farm it or use your buildings or live in one of your houses. And that's where the coverage would be provided on your policy. And then that also extends to, making sure that you make sure that that person leasing your property has their own insurance and is listing you as additional insured and has a contract in place. Those are all the kinds of things to make sure also are occurring. But the number one to make sure that your policy would extend coverage is to make your insurance company and your agent aware, hey, I'm leasing out land. What do I need to do? What do I need to change? And then the other ones there you can see. I have a lot of chat questions. So let's go into that quick. Um, okay, I did the appraisal. Would day camps cover how should we address volunteers or ag school? Oh, yeah. Would we require the school to provide certificate of insurance for the student? Would this be covered under personal liability or something else we should consider? Okay. Day camp. How should we address volunteers or school internships that are not 1099s or W-2s? Um, so that wouldn't really be a day camp. Um, Volunteers, you wouldn't really need, it depends on what you're actually doing. I guess I'm just getting a little confused with the question, but I'll keep reading it again. We require the school to provide certificate of insurance for the student. Would this be covered under personal? So it wouldn't fall under personal liability, really. It would go under the business or the farming liability. That said, if you were sued personally for something, this policy would provide the coverage personally. But if you have volunteers or school, any type of volunteer or internship coming onto your property, you'd want to make sure whoever they're working for or through, if they're related to an organization, has workers' compensation insurance. That would be something to look into, making sure that they have that. And I'm going to talk about that in a minute, but I hope that answers your question, Jared. If it doesn't, just write something again and I'll try to answer it. I'm sorry. What if a member of the public injures themselves on your site? An influencer, oh yeah, gotta love it. That yes, if they get injured on your property, they could sue you. They could everybody wants to sue everybody and make a quick buck. But this is the part of the policy, this liability section, that would provide you the coverage if somebody did hurt themselves. Insurance companies also have a duty to defend. So that would extend, defense lawyers, that would all be provided for you under the insurance policy. But yes, that would be a covered issue. Um, Jennifer. Should we be concerned about farm products from other farms being on our farm for sale? Yes as long as, yes, you should always also, again, make sure that whoever is selling that product has insurance of their own. Because if a claim was to happen and, somebody got sick off of it or somebody used it and got injured, whatever the case may be, you can prove, hey, this product was actually from this other farm. Yes, I sold it. However, they're really the ones at fault for any claim. So you might get drawn into the claim, but at the same time, they should have their own insurance. Would bed and breakfast include an Airbnb as well? Yes, it can. There are coverage for Airbnbs, Verbos, all of that stuff that you can get on farm policies. That's getting really popular with yurt communities. Um, where people just take, parts of their farm they don't use. They put up a couple of yurts and then it's very popular on Airbnb. So yeah, there is a way to ensure that. You're welcome, Kelly. Is there a specific type of policy we should be asking that farm that they have when selling their product? So yeah, product liability would be included under that pending they have coverage that's correct for what they're selling. But yes, sales of goods extends with product liability. So that would be a question to not only to make sure that they have liability insurance, but also product liability. And that's something that their agent can always notate on the certificate or send you a copy of their policy, just so you can see, hey, here's what they're provided for. And this is also something that brings up a good point about relationships with your own agent too. I have a ton of clients who have vendors coming on their property and they say to me, "Hey Jen, like I don't know what to ask these people. Can you help?" And then I say, "Okay." And like I'm telling you guys, here's what you should get from them. And then they say, "Okay, great. I got it. Can you review it? Can you tell me, is this okay?" And yeah, I can. I can't answer legal questions when they send me, contracts necessarily. I'm not a lawyer. But I can help from the insurance perspective. So I think it's really good to have a good relationship with your agent and, talk to your agent. No, all agents are not equal. I love all agents, but we're not all equal. And it's also personal preference on how you work with somebody. You need to have a good relationship with your agent. Maybe other people say, "Oh, that agent's horrible," but if you have a great relationship, who cares? If they're doing what's right for you and open lines of communication and talking to each other. You don't really want to have an agent that you never hear from. It happens. But at the same time, maybe you never hear from them, but when you have a problem or you send an email or you call them, they respond immediately and you're priority number one. That's important. So no, not all agents are equal. Not all insurance companies are equal. But yeah. 3 for 3. I'm sorry, Jared. Um, you know, as you can see, I mean, on my first slide, agents who have designations, this is kind of going off on a tangent, but it's good to know. Insurance agents, there's a lot of us out there, but there's not a lot that have designations. So those are basically all the letters I had after my name. Agents who have designations show that they're invested. They want to be better. They want to learn more. They want to keep going. They want to do what's right for their clients. Getting those designations are not easy. So I do think that agents with designations, aka all those little letters after my name, do really, help set people apart. So I guess that to answer your question, Jared, quick about like how might you be able to evaluate, I would say maybe look and see, do they have letters after their name? Maybe that'll be helpful. Um, okay, Judith, this is a long one. Bear with me. We lease farmland and sell produce through a CSA membership and farm stands at farmers markets. We also host staff, interns, and occasional campers on the land. What types of insurance coverage do we need to protect the farm operation, the landowner, and our organization? Oh, okay. Sorry, I scrolled too low. Um, Maybe I got to make this box bigger. Bear with me. Okay. Additionally, can farm insurance extend to one-time or collaborative events held at another farm's location? And if so, what endorsements or certificates should we request to ensure proper coverage? Um, so you host staffs, interns, and campers. That's all, types of that. coverage would fall under both business liability and farm liability. It would have different codes that would apply. Like having camps is a business liability code, whereas the CSA memberships and having farm stands and farmers markets is a farm code. So it's more just the coding on the policy, and the different classifications and coverages. But it would all still fall under same type of farm insurance, just different line items. Um, and yeah, again, same type of insurance coverage we've been talking about. Again, it's just where the coverage would fall on the inclusive policy. Can farm insurance extend to one time or events? Yes, it can. There's different codes, but social business events, and that would just be a line item again under business liability. If you had a farm location where you had a fun event, maybe a wedding, something like that. And again, you would just ask for a certificate of insurance. And then, like I said, you can ask the agent for that organization or that business to just notate, that there's specific coverage, and they should be able to do that. Is there a rating system for insurance companies so we could have choose a better one that works with the type of farm you have? So there's AM Best is the insurance company rating system. There is no rating system I'm aware of for agents specifically. Um, I'm sure Google reviews or other reviews, but insurance company ratings would be AM Best, and it's on a scale of A double plus to I don't actually remember how low it goes, but any insurance company that's A rated or better, A plus, double A, they're reputable insurance companies. That basically means they're going to pay your claims. It means they're financially sound, which is what you always want to ensure too, that you're working with a company that has the capital and the money to pay out claims. In the Northeast recently, there's been a couple insurance companies that have basically gone under, because they didn't calculate the premium they needed to actually pay the claims correctly. And then they got in a point where they really couldn't pay out claims. And that's really the whole point of having insurance is to pay claims. So AM Best, that's really what I would say for insurance companies. And like I said, agents, I don't know of any website to rate them. But if somebody found one, I would love to know. I hope I have a good rating. But anyway, but yes, Jared, just ask questions to ensure my investments are protected. Yeah, you just got to keep asking. And like I said, just find somebody that you click with and that is responsive. That's really the number one thing, I think. If it's coming later, interested in agritourism, yes. Yes, that's 2 slides from now, if my memory serves. So please hold, Lori. Um, Farmers tend to be a jack of all trades and a master of none. If the farmer is doing the work, pulls a permit, and follows the correct building code, are there risks that we should be worried about when doing work as a homeowner business and not as a licensed professional? So, from a farm insurance perspective, it really wouldn't provide coverage if you're building like building a house or doing renovations for somebody else. That would be a different type of insurance. So even if you have your home farm insurance and your business liability, if you start doing any type of construction, that would be a separate type of policy you'd need. That said, if you're pulling a permit and you're building on your own property, that's not really a problem that I would see as an issue. But if you did build for somebody else, then you would need a different type of insurance because this farm policy would not provide coverage for that.
I think his question is more is that if something was to happen to that structure, would it still be covered because he built it versus a licensed professional?
Oh, yeah. As long as if it's permitted and follows codes, I don't see why there would be any issue. Um, I wire the electrical in my own barn, it burns down. As long as it passes the inspection, um, if it's a permitted structure and it goes through the proper inspection channel, then I don't see how that would be a problem. Um, it's an error. It's negligence in that sense, but I don't see it being a problem. Um, would flood insurance be separate given some of the changes, the floodplains? Yeah, so flood insurance is a national program. It is completely separate. Flood is excluded on homeowners, farm policies. The only one it's not excluded on is auto policies. which is a weird fun fact. Um, but yeah, flood is a completely separate insurance.
Okay, we have some additional questions. But I need to ask my insurance to specifically do. I guess the way to look at it is do you need to for liability insurance? Do you need to specifically list the activities of possible risks, such as pick your own with scissors
Y-
and knives, selling home processed
Yes.
jams and preserves, and so on?
To ensure that you will actually have a claim covered, yes, it's best to make sure that everything is properly documented, properly insured on the policy, properly notated, to make sure that there's no unknown exposures. That said, I'm not saying that the claim won't be paid out if you started doing pick your own a month ago and then something happens and your agent, you never told your agent. I don't know exactly how that would play out. Not saying there's not going to be any coverage. However, it could end up having a back end problem with your insurance company saying, oh, well, we're going to pay out this claim, but now we're going to cancel you tomorrow. So I think that, if you're starting to get into new operations, you should really reach out to your agent and let them know. Um, Can you
And
expand on broad versus special coverage and any other key type of coverage we should pay attention to? Um, in relation to what specifically, Jared? Sorry. Broad versus special could apply to a lot of different things.
well, while he's retyping, we have a couple other questions
Okay.
that are in the
Yep.
Q&A part. So have a farm policy. We have a couple of horses that are not defined in the policy. Would they be covered for liability in the case of an accident?
Sorry, say that one more time, Steve. I just want to make sure I understand.
Sure. So basically they own some horses and but they're not necessarily listed on the policy or known in the insurance. Would the owner still be covered if something happened due to interaction with the horses?
So, if you have a farm insurance policy, I would think that they should be aware of the horses, unless the horses were a later purchase and never was known to, the company or the agent. Um, as long as it's a farm policy and there's no exclusions for animals listed, I would say there is coverage. That would be going into that 100-page document of exclusions and making sure that there's no line item exclusion for like farm animals on the property or equine operations on the property. Um, but yeah, as long as it's a farm policy and not like homeowners policy, I don't see that being a problem. Like I said, unless there's an exclusion on it, I wouldn't see it as a problem. Obviously, it would be best to know, you have horses on the property. Are you doing anything else? Are you doing riding lessons? Are you doing any boarding, care, custody, and control? Actually, talking about horses, we'll get right into equine liability. So this kind of goes to, are you doing boarding? Are you doing clinics, riding lessons, shows? Care, custody, and control kind of goes in with the boarding side of things. So obviously you're boarding somebody else's horse. It's in your care, custody, and control. If something happens to that horse, if it gets out, if it gets injured, those types of things would be provided under this type of coverage. Equine therapy, that's getting really popular. Um, so I hope that answers the equine question. I think you said there were more, Steve.
Yes. So I think this one. Oh, so haven't touched on yet, but so if the what if the liability waivers that a farm owner has people sign or do they carry any weight? Do they carry any
Yep.
weight?
Yeah, so depending on this is more of a legal question, in terms of how it plays out in the court system. Insurance companies, we do like you having waivers. It does provide a layer of protection saying, hey, like, you know, it's understood that you're signing off that you may get hurt doing this. Um, in New York, there's the inherent liability with horse operations or horses in general. Um, but yes, waivers, signage, all great. I don't know of any insurance agent who would say that waivers and signage is bad. I think it's always great. It adds that layer of protection. That said, from how it necessarily plays out in a lawsuit in the court system, that would be a better question for an attorney. But we do love contracts, waivers, anything like that. And also having it documented with your agent on file is pretty good too. Just so that they're aware, hey, you have this exposure, but you have this waiver. It's great. It's good to know. Um, I just want to see if Jared came back with. Um, oh, yes, broad and special, I guess, can be applied in main type of liability and narrows and widens guardrails to the type of events, or at least the nationwide is mitigate their risk and fine print. Yeah, so no, okay. I had a feeling you were talking about coverage forms, but I just didn't know exactly if that's where you were going. So thank you for confirming. But yeah, so broad form policies and special form policies are different types of coverage forms. So broad form would just say it's specific named perils. So like I said in the beginning, perils. It only will cover you for fire or fire and wind. It's very specific. Whereas special has more, it used to be considered all risk. However, everybody took all risk to mean everything under the sun was covered. So now insurance companies and in the industry, we got away from that and we just call it special. But it means it'll cover anything as long as it's not excluded. So that's where I kind of said to the other horse question, I said, I would think, again, not knowing the specifics of the farm policy, but um, yes, it does, Jared. I don't make the words, but yes, it does. But going back to that question about the horses, like, does my agent know I have horses or not? My guess would be as long as it isn't that type of specific coverage line item, if there's no exclusion, I would say horses would be covered if something happened on the property. If I have bees on the property and the public is on site, the bees are pollinating and personal honey consumption. But should I be worried about the member? Yeah, so this question's come up a lot. Right now, it's it's under the inherent risk of UCB, you see the hive, you see the boxes, putting up some signage saying, bees in the area, does help. Um, but I have somebody who actually does they're very big with honey, and they do a camp, like a 1 day camp for kids every year. And they have a waiver that they sign, they put up signs, and that's really kind of all they can do. Hopefully, if people come on the property and they have a severe bee allergy, obviously as adults, generally they know. Hopefully they have the correct EpiPens. But kids are the issue all the time. But yeah, having signage, making sure people are aware, that's really all you can do. I think everybody kind of knows bees might sting you. But yeah, that's really all you can do. Um, yeah,
I
no,
think,
it
go ahead.
it kind of is, Jared. Yeah. No, I just was gonna say it's just again depending on the type of policy and the company you're dealing with, broad or special. But yeah, you can always reach out after. Happy to answer more questions offline. Okay, Steve, any other questions right now?
We're going to hold them so that you can get through the rest of your slides we only have a half hour left. So I want to
Okay.
make sure that you cover what you want to
Okay.
cover, Jennifer.
Yeah, no, I mean, hey, it's great. I'm almost I'm getting there. The next
Okay.
ones are pretty quick anyway. But so in addition to all the farm insurance and everything there, um, every farm has vehicles, right? So you're gonna want to have commercial auto. This isn't generally in addition to personal auto, which would be, your own personal vehicles you use when you go to the store, you go on a road trip, or, you take your kids to a game. Those are your personal vehicles, generally in your personal name. This would be commercial vehicles or vehicles registered to a business name. Commercial auto can be in your personal name. Say you have a giant tractor trailer like in the photo, but it's in your personal name. You'd still need a commercial auto policy to insure it. So personal auto is really just for smaller, normal vehicles, whereas commercials for, like I said, trucks, tractor trailers, or those private passenger, like an SUV or a sedan that's insured or registered and insured in a business name. Um, Then we have workers' compensation. So this is really, rules vary by state. It's required currently in all states except two. Texas does not require it, and South Dakota only says it's suggested. But the thresholds for coverage vary. So in New York, the minute you hire one person, you need workers' comp. Otherwise, you're going to get a nice letter from the state and it'll say, hey, you haven't had workers' comp for X, Y, and Z days. Here's a lot of money you owe us. Um, and for instance, in Alabama, they have five or more employees. So you basically don't need to have workers' comp until you get over that five employee threshold. Um, Workers' comp can be provided by private insurance companies. We provide workers' comp. But there are also state funds that you can get. New York State Insurance Fund is an example, but there are certain states that only have state funds, which you can see there: Ohio, North Dakota, Washington, Wyoming. So there's no private insurance carriers that offer workers' comp in those states. A big thing I get a lot is like, oh, I don't have any employees. I have volunteers. They require workers' compensation too. Um, Basically, even though they're volunteering on your property, they could get hurt while doing, quote, work or volunteering for you. So you should have workers' comp in place to make sure that if they were to get hurt while volunteering, this coverage would extend to them. Because they're not actually getting paid a dollar amount, the way it's calculated is their state minimum, payroll would be provided as the dollar amount. Minimum wage is basically the dollar amount that's provided to use to calculate how much they, quote, would be paid if they weren't a volunteer. Um, Workers' comp is also important. Even if you have a lot of 1099s who come on your property, you still want to have it just in case. What if they don't have their own workers' comp and then they get hurt on your property? This would still extend. So workers' comp is great once you have, people outside of your family coming and working or volunteering or doing anything on your property. Always good to make sure either you or they have it. Um, all good, Jared. You have my email and you'll get it on the last slide. So feel free to reach out. Okay, so umbrella. So this is the part where everybody starts dozing off, except this has been a very active session. So I don't think I need to really use the cute goat with an umbrella on its head to wake people up. But umbrella policies. This goes above and beyond your underlying policy. So underlying policies are like we've been talking about: your farm policy, your auto policy, your workers' comp, your homeowners, for instance. Those are underlying policies. The umbrella goes above. So coverage available could be anywhere from 1 million to 10 million plus, all based really on the size and scope of your operation. A lot of the time people think like, oh, I'm not a high net worth individual, or I don't have billions in assets or whatever. I don't need an umbrella. Everybody needs an umbrella. Today's environment, the cost of everything, like, you just need an umbrella. You can't go wrong. They're relatively inexpensive when you look at the grand scheme of insurance. So you could get an extra $1 million umbrella or $2 million umbrella for, 250 a year or 500 a year. I mean, it's insane how low the premium is for an umbrella, but it's such a valuable thing to have, especially like we're talking about the public coming on your property, animals, like so many things. I really think everybody needs an umbrella. And basically how an umbrella works is you have a claim. It goes through your underlying policy. Once your underlying policy has no more money left in it to continue to pay the claim, the umbrella would kick in. So say you had a $3 million claim. The farm policy would pay the first million. And if you had a $2 million umbrella, the umbrella would pay the next two. In that example, though, if you only had $1 million umbrella, your umbrella would only pay the million. And then you'd still have, unfortunately, an outlying potential $1 million that would need to be paid. But umbrellas, super important. Um, so this is the famous I forgot to tell you insurance agent slide. So these are some examples of things that I've had clients tell me. I forgot to call you. I built a barn 6 months ago. Oh, that's great. Want to talk about insuring it? I got three new tractors in cash, but they weren't financed. So, I didn't think I needed insurance. Okay, but if the tractor went on fire, you'd be calling me, telling me, "Oh, is that insured?" And then we'd have to have a very unfortunate conversation. I forgot to tell you, I started boarding horses. We've talked about horses here. Is there anything I should add? Lots of things with boarding. Now you got somebody else's horse in your care, custody, and control on your property, boarding contracts, lots of things we need to, make sure are properly protected. Um, Now processing chickens and selling meat. Okay, so maybe you only did vegetables and now we're into the meat game. Lots of different things we should talk about and, add on to the policy. We're not mind readers. We don't have crystal balls. We don't know what our clients are doing at every waking moment, thankfully, sometimes. But we need to know. And it's really, just pick up the phone, send an email, say, hey, I'm going to start getting into this. Anything I should do? No, maybe yes. You never know. Um, but it's always, and this goes back to kind of what I was talking before when Jared was asking all the questions, open relationship with your agent. Talk to your agent. Like, don't be scared of your agent. Not every phone call you have with them is going to result in a price increase. Generally, it might, especially if you're buying and building new things, but not every time it's going to be a bad thing to pick up the phone and ask a question. We're a resource. We want to make sure that you're properly protected. Um, our umbrella is expensive. I think I just answered, but no, they're one of the most inexpensive policies. When you really look at what coverage it's providing, it's pretty, inexpensive. Um, I've been telling you for a year that I'm going to process chickens next year. You wait till now to tell me you won't cover it. Why didn't you say that a year ago? Yeah, I that's that's a different one. I feel like that's not good. Should be documented. And that leads to my next comment, which is reviews, annual reviews. Actually, one more thing about this I forgot to tell you. I went on a client meeting. This was years ago now, but I went. I knew where the farm was, but as usual, you just want to make sure you go to the right place. So I put in the address, driving along. As I'm going up the road, I start seeing these beautiful, beautiful red barns. And I'm like, I don't remember those at all. And mind you, I reviewed with him a year prior. And I'm like, I don't remember these barns at all. And I keep driving. I'm like, maybe it's a new farm that got built. Maybe I just don't. Okay. I pull in the driveway. They're his barns. First thing I say when I get out of the car, when did you build those? He's like, oh, a couple months ago. I go, okay. He goes, yeah, I wanted to talk to you about that when you got here. And I just told him, you could have emailed me or called me and we could have done this sooner because I would like to make sure that these beautiful things were insured properly and, we're not having a bad phone call. But anyway, side note, annual reviews. Super important. Things change all the time. Especially, like Jared commented, oh, like I told you next year, I'm going to start doing it. If you do a review every year, whether it's on or at the renewal, that's always ideal. But, sometimes there's big changes that happens mid-year. Always a good time to review. Make sure everything's in order. Sometimes not only you're doing more things, but maybe you're scaling back. Maybe there's coverage on there that you're not doing anymore. Maybe you used to board horses, but now you aren't, and you only have your own horses. Like that's a coverage you don't need. Let's get rid of it. Scale it down, make the policy work for you. I do believe insurance agents should reach out to schedule. Insureds don't always think about it. It's kind of on the back burner until you get the bill or the renewal, and then it's like, oh, I gotta call my agent. But insurance agents should reach out. I'm not saying I'm perfect. I sometimes don't. It happens. But we always send some sort of, hey, it's been a year, let's touch base, something like that. But yeah, reach out to your agent. Don't be scared of them. They aren't bad. They can be good and they can be helpful and they can make sure things are updated and accurate. And again, pricing can always change for the good, hopefully always for the good. But if you build new things, you don't want them to go on fire like in this photo. So the other part of this um, talk today was talking about risk management, insurance and risk management. Technology is become such a beneficial tool in risk management. Electrical safety, farm management software, vehicle monitoring. These are all some companies or programs that you guys can always look into. I have clients we partner with Ting and PrevTech. Ting and PrevTech are both really cool. They basically are just like a little outlet thing. You plug it into your wall, and then it monitors the electrical connectivity in your house and the wires, and it'll tell you like, hey, this wire's overheating, or oh, this is a short, in the system. Super cool. Great little use of technology, user friendly, but something that can really help prevent potential electrical fires in your wall that you don't even know are happening, especially with older homes too. Sometimes the electrical panel's been updated, but maybe not all the wall, the wires. So something to look into. Just again, risk management, something easy. Farm management software, it's gotten so advanced. I'm sure a lot of you have looked into it if you're not already using it, but I think it's great. And then vehicle monitoring. If you have a lot of farm vehicles or you do a lot of deliveries and you have a lot of, employees who drive your trucks or vans from farmers market or wherever to, the farm, getting one of these systems, Verizon Connect is really cool. I've stared at like the screen in my clients' offices where they have it up with all the vehicles kind of going all over the place, and you can watch them drive, and then it'll tell you like if they're going 5 miles over the speed limit, they'll change a different color. And you can also set the vehicles to only go a certain speed limit or certain mileage over the speed limit, which is all great. It's just protecting your investment, your business, your vehicles, and ensuring, hopefully safe driving. And also cameras, dash cams, super helpful in a claims situation. Um, they've come up a lot using the video, making sure, who did what. Obviously, at the same time, it can work against you if your driver was in the wrong, but it is helpful if there's multiple vehicles involved or, an animal collision, something like that. So, technology is your friend. I know that it doesn't always seem like it, and I agree in points, but with this stuff, it's pretty cool stuff that can actually help a lot. So with that, I'm on to the God questions slide. So now is the time for any more questions. I think I got through everything,
Yeah,
but
and there
if you
there
have
are
any more
some others
questions,
that were under
okay,
Q&A, Jennifer.
okay.
So one asks that they have a small barn that is not specified in building coverage. Would it be covered in case of loss?
So how our farm policy and most farm policies work, it would be specific buildings each building needs to have its own insurance. So if it's not specifically insured, then there wouldn't be any coverage. But again, it depends on the specifics of your carrier and how their policy is written and set up. But that's how ours would operate, which I can really only speak to. I found the Q&A button, Steve, by the way. So now I
Oh,
can actually
okay.
read them. I was like, where is this button the whole time? Okay, I found it. The farmers markets that I tend to sell farm products at require every vendor to provide a certificate. Yep. And the city sponsors the market. Okay. I haven't sold at farmers markets in several years, and each time I ask my agent, they don't know what to do. I feel like it's a pretty simple ask. Normally, all you need to say is, "Hey, I'm going to a farmer's market. They need a certificate of insurance. Here's the name of the market. Here's their address, and then like a fax number and email to send it to." So long as you have farm liability and liability insurance, I don't see why that would be a problem unless something changed with your policy or you don't have that coverage anymore. But it's like I said, pretty cut and dry. You just reach out to your agent, say, I'm doing a farmer's market. I need a certificate. Give them the market name or the city name, their address, fax number, email, and you should be pretty good to go. What advice would you have for newer farmers that are using their personal vehicle for business? Um, if you're going to definitely use it for business, there are ways on your personal auto to notate that it's for business use as well. So I would just say talk to your agent, talk about that, and they should be able to guide you in the right direction. Depending on the type of vehicle, you might want to look into just getting a commercial auto, if it's primarily for business use. But if it's interchangeable, I would just talk to your personal auto agent and they should help. Um, yep, life insurance is going to be covered in another one, but yeah, I think life insurance is great when you have it's like a key man employee. If you know if something happened to that employee and it would really interfere with your entire business operation, there are ways to set up life insurance where you basically own the policy, you've paid for the policy, but then if anything happened to that employee, you'd get paid on it to basically, fill that role. Um, but yeah, that will be covered in a different class, but life insurance is a good one too. So yeah, so if there's nothing else, how are agents compensated? So based on the policy, it's a percentage, it's a commission percentage. So different policies have different types of compensation, but it's really just straight percentage. Um, so we don't get paid for all the questions throughout the year and all the reviews. It's just, the percentage of the policy. You're welcome. Thank you,
Uh,
Jared. I try. I try to keep it fun. I hope everybody found something informative. I hope I didn't ramble too much. Sometimes I can do that. Um, but I think insurance can be fun sometimes.